Good morning, everybody. Welcome to the Flow Show. Here we are, Tuesday, the 9th of January, ready to rock and roll. No K-Man today, so just me, myself, and I. So we will get cracking with some of the news and then have a look at a few charts. According to Bloomberg in China, price wars are breaking out amongst some of the consumer brands over there on the back of slowing growth. This is something you have to be wary of when your economy is not doing too well, that then you do enter a real deflationary phase, because if people aren't selling stuff, they cut prices, and if everyone's cutting prices, they all compete to cut prices, and then you end up with a spiral down in prices, and that's what brings deflation. That'd be something that a lot of economies will be worried about, particularly in the Eurozone. We are seeing falling inflation, i.e. inflation still rising, just not as fast. But if the economies are going to suffer, then we start to get price decreases in everyday goods, and we start seeing some negative numbers coming in, and that can spark a spiral, deflationary spiral, which will definitely be something that the ECB will be very guarded against. But that's if that happens. But we're seeing the beginnings of that in China, it seems, according to that headline, which doesn't bode well for Friday's CPI numbers, that I can tell you. In the meantime, the PBOC are already seemingly worried about it, because they have vowed to use their various monetary tools to help boost credit. That will include using the reserve requirement ratio and other tools to get themselves back on track. Let's see if they manage that, but definitely and more rate cuts coming seems to be the way forward. When they happen, I don't know, but they could be coming pretty quickly. And when they cut the reserve requirement ratio, that comes out of the blue rather than the set times for the other rates like the MLF and the LPR and that sort of thing. So that's something to look out for. You suddenly see a big move or sudden move in Aussie dollar. Keep your eyes on the headlines. It could be that China have cut the RRR. Over in Japan, the BOJ, according to Nikkei, turned net seller of stocks in 2023. They've obviously been ETF buyers as part of their monetary policy and whatnot dealings over there. Well, they were net sellers of stocks in 2023. Maybe that's another step towards the ending of easing. Let me just stop the squawk. Excuse me. Where am I? Lost my place now. Sorry, just seeing a headline up because we're watching this Taiwan stuff as well, and China is looking at terminating more existing tariff cuts over Taiwan. Obviously, we've got that election coming this weekend, so there's going to be lots of those sorts of headlines. Anyway, back to Japan, and we had some CPI data out of Tokyo, largely as expected. Here we are. So core CPI came in at 2.1% as expected. The other numbers, there's an ex-fresh food and energy number, a core number, which is not on this calendar, came in at 3.5% versus 3.6% prior. Headline CPI came in at 2.4%, was estimated to come in at 2.5%. So that came in lower there. Overall, there's a case of two cases you can make here. One, CPI is coming down, which is what the Bank of Japan told us, which means they could stay on the easy path for a bit longer. On the flip side, these numbers are still above BOJ target, and in some cases well above BOJ target, like that core number at 3.5%. So it keeps them on the boil for ending easing. They did expect inflation to come down in the latter part of this fiscal year and then start increasing again. So for now, they are right, but we'll have to see when those increases come in and whether they're going to be assisted by those wage negotiations in the spring. Household spending, however, doesn't look too hot. Down 1%, was expected to rise 0.2%. Month on month, year on year, down worse than expected, 2.9% as well. So still there are some things that aren't quite fixed under the table just yet. Over in Australia, retail sales came in much better than expected, 2% versus 1.2 previously for November. So it looks like a good pre-holiday period blowout from Aussie spenders over there. We'll see if that's maintained in December. Over to our mates at the SMB. They have, or they're going to be booking another loss of around 3 billion francs. That's around $3.5 billion. This is the SMB and all their trading and whatever they get up to behind the scenes to try and make money, which goes into the government, which then forms part of the budgets for the cantons and whatnot. They made a record loss in 2022 of 132 billion francs. They're going to make another loss of 3 billion. They cannot pay out to the government unless they make a profit, and they would need to earn at least 50 billion francs in 2024 to be able to start paying into the government again. So this is very important from a budgetary standpoint. It means there's less money to go around in those budgets, and they'll have to tighten their belts somewhat. The Swiss FX reserves, which I know came in and a few others we're looking at, came out as well. FX reserves up at 653.7 billion from 641 billion previously. I don't think it's on this calendar. Oh, there it is, right there. So you can see the numbers there. So they're still being active in the market. There was a bit of weakness in Swiss pairs on the back of that, as you would expect, those numbers, but it's holding, but it's not exactly a huge move higher. I know a lot of people are still very long the Swiss, very short the Swiss, waiting for this to go up, and it's not happening at the moment. It may be a case that we're going to have to see a big washout to the downside before we then start seeing the Swiss pairs rallying again. So I know a lot of folks in our room are waiting for this to happen, and so is a lot of the market, and it just isn't happening right now. So one to keep an eye on there continuously. Rest of the data, some bits out of Switzerland there. Unemployment rate ticking up a bit there on the seasonally adjusted number, ticking up 2 pips on the non-seasonally adjusted number. Another soggy month for industrial production in Germany, down 0.7%, was expected to rise 0.2%. Year on year coming in worse as well, so not looking good over there. A bit of trade data from France, not too much to write home about there, slightly less on the deficit. Trade balance as well, slightly less worse, shall we say. Activity-wise, no real change, 49.9 billion in exports. It was 49.7 prior. Imports a little lower there. So no real change to activity numbers overall. Further unemployment data, Italy, better unemployment, 7.5% versus 7.9 expected. Eurozone as a whole as well, 6.4 versus 6.5 prior. So a little better on the jobs front there. ECB bonds. ECB's Wojcik said that the Eurozone will avoid a recession and expects inflation to slow gradually. He says they're not discussing rate cuts and won't discuss them before the summer, which goes against what ECB's Centeno has said. Says doesn't think we'll have to wait until May to make a decision about cutting rates. One of the big doves at the ECB thinking they won't have to wait until May to make a decision on cutting. Said the decision to keep normal rates steady for the moment is appropriate, and we will decide when to cut them sooner than we thought until recently. So he thinks we're going to be getting a cut before May at least. Hasn't gone as far as to put his knife on the calendar or his dart in the calendar around March. That's when everyone tends to think that all these banks will first start cutting, but sees a cut before May anyway. Over in the USA, we had some consumer credit data out late last night. If I can find it, where are we? There we go. A big jump in consumer credit, 23.75 billion versus 9 billion expected. Now, there was a big jump in revolving credit. That's the likes of credit cards and short-term borrowing there. That increased 19.1 billion, up 17.7% annually. So again, these numbers are for November. We know it's a big retail month, Thanksgiving, running into Christmas, etc., etc. So perhaps not a big surprise to see a big jump there. You can't really take much from it at the moment. It depends how those numbers progress through December and January. If those numbers remain high into January, then that might start indicating there's some problems with people being able to just afford day-to-day living if they're keeping it on the plastic and they keep borrowing to pay their way. If this is just holiday spending, then that should dip back in January as everyone has a splurge and then goes a bit skint in the new year. So we shall have to wait and see. New York Fed one-year inflation expectations for December came in lower at 3.01% versus 3.36% previously. So inflation expectations still edging lower, which will be good news for the Fed as long as they don't go too far. But if they get a nice two handle on those numbers, the Fed will be winning the fight in their eyes. On that front, Fed's Bostic says that inflation has come down more than he expected. It says families are catching up to past price increases. The pain of higher rates is easing and sentiment should follow. He repeated his stance that he sees 2 25 pip cuts appropriate by the end of the year. Says the outlook now is not for inflation to rebound, but the Fed will still need to pay attention. Fed's Bowman moving more into neutral, I'd say mildly getting into dovish sentiment, was one of the big hawks. Says that policy appears sufficiently restrictive to hit the 2% target and rate cuts will be eventually warranted as inflation falls. On to politics, and US Minority Leader McConnell says that Congress is on track to avoid a government shutdown by the end of next week. So everything still seems tickety-boo over there. And for those of you who may have caught our conversation about Bitcoin and the ETFs on F.A.C.E yesterday, and whether it's going to be a buy the rumour, sell the fact if they finally clear all these ETFs. Standard Chartered Bank says that spot Bitcoin ETFs may bring 50 to 100 billion of inflows in 2024. As I say, that was part of our discussion. Would it be just a quick bolt higher in Bitcoin, or will it be something more sustainable as a lot of the market who don't want to get into coins themselves come into these ETFs? So Standard Chartered think, 50 to 100 billion of inflows will go into those ETFs in 2024. That's it. All I've got from headlines. I can't ask Kay if he's got any because he's not here. You guys and girls got any? If you've got any headlines, put them in the chat here and we can talk about them. No problem at all. Right. So, Ali, the S&B. So the S&B trade with us like Forex trading. All we do. Yeah, they're both sides. They can be both sides of the market, Ali. Hence why they usually end up on the US Treasury's manipulators list. Because they just do what they want in their own currency as and when they like. There is some method to their madness. They are very proactive. They do have holdings of assets. They do run it as a business. The S&B is actually a public listed company as well. So you can buy shares in the S&B if you so wish. It's all part and parcel of how the financials work in Switzerland. I won't go into the nuts and bolts of it now, but think of the S&B as almost like a business bank, if you like. I'd go as far as say almost like a sovereign wealth fund in part. They conduct all their business on behalf of the government and whatnot, and all the profits that they make go into the government coffers. And as I said, split to the shareholders, the cantons. So yes, we know they're active in FX markets. They have been. We all we know what happened in 2015 and whatnot. So they can tinker around with the market as they like and trade on both sides. Enough said on that one before everyone starts getting hot under the collar. So anyway, lots of people still waiting for these Swiss pairs to take off. As I say, seen a little bit of a bid today, but nothing that's taken us out of any of the recent ranges, particularly towards the end of last year. So there's going to be a few people strumming their fingers, but you've got the carry on the right side if you're long these, so it's not too bad to sit in trades in the Swiss, depending on what you're doing it against, obviously. Right, what's going on elsewhere? Dollar yen looking a bit weak again. We had that dip yesterday afternoon. We had another one overnight. I thought it might have been the CPI that triggered it, but I'm not too sure. As I say, there's two ways to read those numbers. It might have been one of the reasons why we dipped down. However, we did down to 143, 44, 50 area. A bit of a watch level, not one I'd trade, but this 50 area has been one that's seen a bit of action going back now and again. So for want of no other better levels, that's where it pretty much pulled up. We are struggling to get back above 144 and hold above 144. So if you take it from when we had this spike up, we are dribbling lower. We're making lower lows, we're making lower highs. So it's keeping the short term, at least this year, the bearish pressure on, but we're not looking like we're wanting to head back down to these lows yet. So from a longer standpoint, we hit the 50 fib, we held the 50 fib, we're coming back down again. So the trend still remains in play as far as I'm concerned. 145 is still my main watch area. If we get above and hold above there, then maybe something is changing. We couldn't do that amongst the data on Friday. We had the little spike, well, fairly big spike, but we soon flopped underneath it on the ISM. So maybe we're just going to start grinding a bit lower. Yields, they don't seem to be helping much today. They're looking a bit more positive. We had that move under 4% yesterday. It's coming to a bit of a shorter time frame. Had that move under 4%. We're back above 4%. It doesn't look like it's going big guns at the moment. So the market's still sorting itself out here, which way it really wants to go. If we do see another move up through these highs, 408, 409, 410, that will probably drag the dollar with it. Although, as I say, compared to what's happening in dollar yen at the moment, that might drag it up, kicking and screaming, rather than a willing follower, shall we say. Ali, what about US 10 years? Why is everyone saying we're done with yields higher? What can reverse dollar weakness? If yields will go down, so dollar will go. Market is pricing aggressive rate cuts. Okay, there's two things to consider when talking about yields. Yields generally have a correlation with the dollar. If yields are going higher, the dollar generally goes higher. But that correlation can wane, like all correlations can do. Also, you've got to remember that it's not a one-way train. If yields ramp up, let's say they ramp up today up to 420, 430, for whatever reason, I don't know, the dollar's going to go with it. But the dollar's going to hit its own problems, its own technical levels, its own reasons why it might not go further. So even if there's a point at which yields moving, the dollar will only go so far, because we either hit a big level in whatever asset you're looking at, or you hit a fundamental level where there's a lot of sellers, or a lot of the market say, no, that price has gone too far. So yields can keep going and the dollar can run into trouble. It can stop and not go as far as yields go. But yeah, the market is bearish on yields because they don't see rates going up. They only see rates going down. If rates are going down, then interest rates on bonds are going to go down. We've had that big reprice already. So the market sees it a hard task for yields to continue rallying higher because of the fact that rates are coming down. So unless we get super strong data, inflation moving back higher and trending back higher, you're not going to see yields going up unless there's some other sort of left field shock to the system, like a government shutdown, which will then put pressure on borrowing costs, make them more expensive for investors because of problems. So unless there are big problems based on the fundamentals, yields shouldn't really go much higher. Like we shouldn't see 10 years going back to 5% or anything like that. Yeah, they can mooch around. Yeah, we can see yields going back to 430, 440, maybe even 450. But unless something's changed with Fed expectations or the Fed themselves, it's highly unlikely that rates will rebound back to 5% or anything like that. So yeah, and that holds with the dollar. So but as you can see, yields are moving, but euro dollar's doing absolutely nothing. So there's different forces at play. There's stuff going on in the euro. There's always another side to a currency, Ali. So as much as there is a correlation, there is always another side to a pair, and you've got to go on what's happening in those countries as well. False break, Brian, depends what you false breaking. False break of that lower level, potentially, yeah. But that was just maybe just end of year stuff. That's what caused the break. So is it false? Yes, but it was driven by flows. Those flows dissipate. When they disappear, the market goes back to what it's doing. The issue is we haven't gone back up to these levels, 420s. We're holding around these low areas. Right, so that was dollar yen I was looking at. Ali, you're saying US 10 years at 4% is overvalued. My 10-year tips at 180 is the better choice if you need to buy bonds. Or if you're talking about Bill Gross, I'll let him do his own thing there. But yeah, you can look at your inflation. But what you have to understand also, Ali, is that people will move their money for mere partial percentage points. If a tip is 180, getting you 180, and a tip in Europe will get you 181, people will go to Europe just to get that extra point. Because when you're talking about billions and trillions of currency or amounts, that one pip can make a big bit of difference. So it doesn't necessarily mean people flood into US. They might flood into Eurozone bonds if they're going to get that extra basis point of profit, and vice versa. And that's what you see all the time. That's what happens in markets. That's what flows are: chasing yield, parking up. If people got cash to park up, be it overnight, be it for a week, be it for a month, they'll look for those extra basis points of yields, and that's where you get your flows in FX. They'll go running around the globe chasing that extra yield. Right, a couple of things I'm looking at. Dollar MEX, I'm getting a bit interested in down into the support area. Let's stick it on the YD, stick it on the daily. We got this creeping down at the moment. We have ever since we had topped out that 1850 area. So I'm going to be looking at a long down into this zone down here. I've got some bids in already down into this area with a stop just below 1660. So I'm just a technical play to see if this support holds down here, because it's quite decent looking support. We've had a couple of goes there, decent hold, decent bounce from it. That's what you want to see. So I think this has been a bit one way, this move. And if it's going to run into trouble somewhere, this is where it's potentially going to run into trouble. So I'm going to be looking at longs. As I say, got some bids in off those levels down there. Target wise, you know me, I'm not one for targets, but what I will be looking at if I do get in a trade and we does bounce and go my way, is what happens if we get back up to this, call it 1705 area, where it's a bit of a support point itself. It's broken down. We're holding below, give or take. You've got to watch the spreads on this one. So if I do get any longs here and it does go my way, I'll be looking at that area, 17s, to start taking some profit off the table and see what it wants to do after that. Yeah, it is a big area, Gavin. You're right. If you can go back even further, as you can see, you can come across to this area here. So there's a lot of big levels down around here, big historical levels. So it goes back quite some way. Hence why I'm happy to give it a go. You know, That's what we look at the charts. Doesn't matter if this chart was an hourly chart or a daily chart or whatever. You know, the patterns are still the same. You know, look at where your support points is, and that's what we want to trade. And if it goes through, it goes through. I'll be keeping it fairly tight, and then I'll lose some money. But that's where I know where my risk is going to be, and I know how much risk I'm going to put on the trade. So as long as I'm happy with that, I'll get in a trade. Esther, yeah, I can have a look at silver for you in a bit. 1679 is your first level. That's where, just give or take, where we had the bottom pretty much yesterday. So yeah, fair enough. 1679, I can see what you're seeing there. Not what am I looking at, but you know, everyone sees their own charts, has their own levels. As long as you're making money from it, that's all that counts. Oh, brand cable. You should be an expert on cable by now. You listen enough to everyone else. You should be doing your own analysis. You should be giving us the lowdown on cable by now, Brand. You've been doing this long enough, mate. What do you want to know about cable then? Is it going up? Is it going down? That's what everyone wants to know. What's it doing? Not a lot. Still mooching around 126 to 128, give or take. I'm not really interested in pissing around in the middle. If you want to be scalping it, go right ahead. But I know where the support is. The support's down into 126 and the resistance up into 128. So if I'm going to be looking to trade it, which I'm not really that interested in cable at the moment, that's where I'll be trading it. I'll be trading at 126 or trading at 128. You want to muck around in the middle, you be my guest, mate. But yeah, I see nothing happening in this one whatsoever. It's quite a tight range. That in itself perhaps is a warning that since, well, you can probably call it for the whole of December, late November, it's been in a fairly tight range. You know, we've had pretty solid move, but it's just going a bit more sideways now. And cable doesn't tend to sit in a tight consolidation phase for too long. So the longer this goes on, then the more you'd be looking at a potential break if we do go one way or another, either through 126 or through 128. So that would be something to look for, because we know, as I say, cable doesn't like to be quiet for too long. Right, Esther, let's have a look at good old silver. Probably have to do a bit of chart tidying up here. Let us know what you're looking at as well, Esther, just so we get a fair idea, so I know what I'm talking about. Again, a bit more range, but I know Kay's been waiting this one forever to take off, but it just can't seem to find its feet and really make a move higher. But as you can see here, we've got a series of higher lows. So that might suggest we get another move up to the 25s, maybe even pushing up into the 26s again. Fundamentally, if you're looking at this from as a commodity rather than a precious metal, i.e. its industrial use, there's probably good reasons why it's not doing an awful lot, because we know that manufacturing isn't doing all that. So the use of silver in whatever components, your solar panels and the like, aren't being picked up wholesale because of that slumping growth picture. For me, it's quite clear where you want to be really trading it down into the low 22s if you want to be looking at longs. It's a bit messy, but we've had several goes around this 22 area. Obviously, it's looking a bit more of a gift if you get down to the 20s, but if it moves quickly down to the 20s, something must be going on. And in that case, it's all right saying I'd like to buy it at $20 when it's trading 23, but if it suddenly dropped down there in 2 days, you'd be thinking, well, do I really want to buy it at $20 now? 20 and a half. So as always, you can have your areas where you want to trade, but know the reason why the price is moving there. Is it something game changing? Is it something that means you shouldn't be buying it down here if there's a big move? So while it's good to rely on the text like I'm doing for $MEX, I always want to know why a price is moving to a level. And as long as I like that reason, then I'll get in a trade. But for me, just sitting here now, you know where the resistance is, up into 24, 24 and a half. As I say, you know where the main support is coming down into 22s. So you've got your range there to look at. Ali, what about Euro fundamentals? How strong Euro is justified? Is Euro strong? That'd be my first question. What it's strong compared to what? Strong compared to today? Is it strong compared to 6 weeks? Is it strong compared to a month? Let's see if the Euro is strong. Let's put it on a clean chart. Excuse me. There's a long-term chart. Does that look like the Euro is strong to you? So what's your context for Euro being strong? Okay, the dollar, everything's a bit mixed, you see. So this is why you need to look at different charts, look at different timelines. Because when you're talking strength, you're talking a day, a week, a month, a year. What are you talking about? That's just strength. Let's go back onto my other chart. So even here, is the Euro looking strong? It's looking stronger than it was when it was at 105, but it's not looking as strong as it was when it was at 110. So, you know, again, context is needed. I don't really subscribe to whether currency is strong or weak. I just trade what it does. I'm just interested in what it does. At the moment, all it's doing, it's maintaining this trend. That's what it's doing. So one could say on that basis, it's strong. It's keeping the strength. Why is it keeping its trend? Because that's where the market wants it to be at the moment. You could say the Eurozone is weaker than the US, so Euro should be going down. But the reason Euro dollar isn't going down is because the Fed is the bigger game. You know, what happens with Fed and the cuts and everything we're trading there, that outsizes what's happening in the Euro and the ECB. Just the same way as it did when we were in the midst of hikes and the dollar was gaining against everything, you know, as we were trading those hike expectations and all through 2022, 2023. So, yeah, it's all about who you're trading and what you're trading. Yeah, the Euro will have moments of weakness. You get a crappy bit of data out of Germany, you'll see the Euro dropping. But then you get a crappy bit of data out of the US and you'll see Euro rising. So it's... At any particular time, you have to understand. This is why one of the reasons why I want to do the flow show and do it heavily based on fundamentals. A lot of it is because that's how I trade. I have a running picture in the back of my mind where the Eurozone's at, where the UK's at, where the US is at, where the banks are at. And it's all about seeing that picture, seeing what the market wants to see as well. And that's why you get your price where the price is, because the market says, right, we're happy for the Euro to trade at 109s, because that's what we feel. We feel that's the appropriate level. Doesn't matter whether I agree or not. I'll do my trading on whether I agree or not. If I think that the Euro should be down at 105 because of X, Y, Z to happen to the economy over the next 6 months, then I'll go short. At the moment, I'm long. Why am I long? Because I traded a big technical level down at 105. Pure and simple. But it also tied in with the fact that the Fed would be coming to the end of rate hikes at some point, and that would be negative for the dollar. So, you know, the fundamentals speak for themselves. The Euro is where the Euro is, because that's where the market wants to put it. If you don't agree with it, then trade against it. But know your risk, know where you're wrong, know what you need from the fundamentals to go your way for your trade to be right. And if you're not right, where you're going to get stopped out. But that requires trading more longer term, like I'm trying to do with the Bank of Japan. Although every time I open up my trading screen, it's cost me more on the swap each morning. So yeah, that's strength and weakness is a funny thing to get your head around, and it's not really worth looking at that in terms of picking a trade or making a trade. A currency is going to go where a currency is going to go, whether I think it's strong or weak, or whatever. Right, let's have a quick look around, because stocks have had a bit of a decent bounce. Again, I don't know what's going on with stocks at the moment. I didn't understand why they were weak when we got that weak data from the US, like the ISM, and we closed down on Friday. I've no idea why we're back up again. We did have a few bits and pieces of earnings which didn't look too bad last night. Just a few lines I caught just as I was doing the options before I switched off for bed. So maybe, that's given a bit of a boost to stocks this morning. But I think a lot is going to decide on some of those bank numbers that we're going to get later in the week. If those numbers are bad and we, stocks sell off, but then we rebound again, then that's going to tell us something about the market. What I did look at yesterday, again, we were talking about it on F.A.C.E. Just wanted to show you this chart, which looks quite interesting. Dale was talking about the yearly, could stocks finish the year down, have a down year this year? Just looking at that, what do you make of that? 3 big yearly candles and a big, huge top up around the high 47s into 48s. What does it mean? Mark in our chat room said it looked quite bullish. I could concur. If you get a break, what this shows here, these big yearly candles, if you get a break here, it could well be very big. So, I'm half tempted to go maybe with a long if we break 48s and just see if it balloons up, because you don't often see something like that on 3 yearly candles or 12-month candles, if you like. And you can look back, you can see how many years have been negative, few and far between the negative years. So, go with that basis, then perhaps we could be ballooning up through 5,000, and who knows. But this one might take a while to play out since it's a 12-month chart. But we're back up in stocks anyway. As you can see there, maybe putting in a test on those highs. If we get bonanza bank reports later this week, then I think we'll take out those highs pretty easily. And that might be something to go with if you're trading stocks as well. Ali, you've got loads of questions today, haven't you? Keep me on my toes. What ratio do I use mostly in trading? What do you mean by ratio? Do you mean leverage, profit ratio? I don't use ratios a lot. It's something I tell traders, obviously, if you're looking at something like risk and reward, you always, because I've been doing this so long, I don't look too much at risk and reward. I look at increasing my reward over my risk. That's the general way I trade. If I'm putting on a trade, if I'm risking 20 pips, I want to make at least 20 pips, be it on half the trade. I'm more about my risk, getting my risk to zero. What it does from there on the reward side, I don't care. If it goes 40 pips, 50 pips, 100 pips, and I'm trying to ride it, that's good enough for me. But I don't look at risk reward trades. I'll happily jump in and make a pip if I feel right at that time. I'm happy to risk 10 pips to make 1 pip. If I feel so certain about that trade, I'll do that trade, because that's what I used to do on the floor when I was a local. It didn't matter. Profit was a profit. But I don't tend to look at risk reward, because you can get too tied up in it. What I would say for inexperienced traders is it's worth keeping an eye on your risk reward, because you want to turn more winners obviously than losers, and you want to make the most of those winners. So when you're talking risk reward, look at your risk first, then try and push the reward, if you like. It's why we use the slice and dice strategy. It's why I've told you, particularly Ali and others before, if you get into a winning trade, if you have a profit target, think about changing it up. Think about only taking partial profits, seeing if you can push the rest of the trade a bit further. Maybe your risk reward will then grow because you can push that trade further, get some more in the bank. But then I understand it's difficult. Some traders, you want to make your reward. If you're risking 20 to make 30 and you get your 30, you take it, and you're never going to go skint if you do that regularly. But as far as I'm concerned, I've been doing this a long time. I'm always about pushing to trying to get as much as I can out of a trade. You know, keep slicing and dicing as far as I can till either run out of slices or I'll get hit on my trailing stop, because that's how you exponentially increase your rewards over your risk. But yeah, for me, I just want to get my risk to zero, whether that's 20 pips, 50 pips, 100 pips. I just want to get it to zero as quick as I can and then not have to worry about the trade thereafter. Right, you guys and girls, got anything else you want to look at? I've not got an awful lot to look at here. I am still keeping, obviously, I'm positioned in it as well, dollar China. That's facing a bit of upward pressure. As I said, it's probably likely to, given that we're looking at the central bank easing it over there and the economy not doing so well with inflation. So I'm the wrong side of the trade with my shorts on this, because it has every possibility of pushing higher. So I may, depends how strong it is, and depends if they continue to fight it, because obviously they're going to be looking to ease, but still trying to keep their currency from weakening too far. It's a battle they've played for a long while. So if they keep fighting the FX side forcefully, even while they're easing, then I'll be happy to stay in the short. But if it looks like they're starting to let it go, I might have to jump ship and see what it wants to do through this easing phase before maybe looking at the other levels. But the good thing about the PBOC, they will tell you in this one. They're pretty clear. If they want to let this one go and see it rising back up to 730s, they'll be pretty clear about that. And then I'll be jumping ship as far as I can hit the button. Likewise, on the other side, if they come out forcefully saying that they're not going to let it rise or not going to let it weaken too far, then people who are buying this pair will be getting out of dodge, and we'll probably see some downward pressure. But fundamentally, like we're talking at the moment, I'm on the wrong side of this one, given what the central bank is looking to do and what the economy is looking to do. And the only reason I'm in the trade is because they don't want this rallying up here again. So that's the only reason. If this was any other country, any other central bank, based on the fundamentals here, I will be long this pair, not short it. So another one to keep an eye on. Gold, Derej, give me 1 second. There we go. Gold. I'm not sure what I've got to say different than what I said yesterday. We're still in the middle of this range. We didn't quite get down to test the 2010, 2000 area yesterday, so I've got no interest here. For me, it is still middling around this range. So I'm going to have patience. I'm not one to go rushing after a trade just because, you know, if people trade certain assets regularly, you trade it every day, fine, you can have a bit more insight to trading the more intraday levels. Me, who may look at this once a day, twice a day, just to see what it's doing, I'm only interested if it gets to the levels I want to trade. So it's either up here or down here, again, depending on the reason why we're moving to those levels. But yeah, from here, not doing an awful lot in the middle. So I've got no real interest for that one. Yeah, CPI may move it. We're going to probably need a big variation to the number for it to move significantly. If it comes in and around as expected, the CPI numbers, then I don't know, maybe we probably get a bit of a dollar selling as it's just further confirmation that the Fed's going to be on the right path to cutting. So it will give the market doves the ammunition they need to stay on their side of the trade. And yeah, we'll see what it does for gold, whether it can kick it out of this sideways action that we're seeing. Ali, you're in dollar CAD today. Let's see what you're up to today. Dollar CAD, you're long at 33.66, stop at 26, TP at 96. Okie doke. Right. So you're in pretty just below market. So, okay, that's all right. Yep, your TP looks okay. We know that's resistance up to 134. So that's where you want to be looking to do that. But again, just as I've mentioned, and your stop is 26. So you're going for 40 risk for 30 reward. So your own risk reward there is a little bit skewed to the soft side, I would say, risking 30. Risking 40 for 30. So you got a little bit of a negative risk reward on that one. But again, why not do a partial TP if you get your TP up here and see if it's going to break through 134. You can always trail your stop up behind it on the balance, so you can keep your stop in profit. Maybe get a 134 break, maybe get 134.26, and then you've improved your risk reward. So yeah, have a little bit of have a think about it, Ali. Yeah, you have a partial TP. Good. On a trailer brand, it depends how fast the market's moving. If I was doing something like Ali, I'd only have a trailer maybe. If I got one, let's say I was doing Ali's trade, 133.66, and we got to 133.96, so I'll take partials off. I was running a 40 pip stop. I'll probably bring my stop up 20 pips. I'd lock in what some of the profit that I took in. So my risk then would be roughly down to close to zero. If I've made 30, now my stop loss is at minus 20. Let's say I've done half the trade off for 30. My stop's at 20, so then I'm up some money, because if I get hit on my stop, fine, I've made 30 and I've given back 20. So I'm up 10 pips on half the trade. But then trailers, I'll keep it fairly tight because we're in a tight range. If we moved up to 134.20, for example, I might bring my stop just up to break even. Or entry, should I say. Then it's just increasing, slowly, incrementally increasing. But I use the levels as my guide for where I set my TP. So if we moved up to 134.20, I wouldn't bring my stop up to 134.10, because if we dip back, if we've just broken 134, that may be support. So I may put it down at maybe 133.85, just to see if we did dip back from 134.20s, would 134.90 hold? If that holds, great, then it's going to potentially kick on up. So I wouldn't put my stop above that until we broke the next higher level, which would be 134.67 in this zone. If we broke through there, then I'd maybe start bringing my stop up, maybe put it just below that trend line. If we got above 135, I'll bring the stop up to below 134.67, this next level. It's all about where the levels show up on the way. That defines where I put my stop. So sometimes I can have him running 20 pips behind. Sometimes I can have him running 50, 80 pips behind. I use the levels on the way up. If the price comes back down again, that's where I define my stops, my trailing stops against. So I want it to do such a certain thing before I will bring it above a level like that. So the price would need to be up here before I brought my stop above 134s. If we're only here 134.20s, I wouldn't bring my stop above that level. I'd keep it below. It's because I want to know. I would hope that level holds on a retest, that we hold the break. I wouldn't want to get stopped out 134.10 and it bounces at 134.98 and then goes to 135. I'll be gutted. So you use the levels the same way you do with your stops as you do with your taking profits and whatnot. Do I take profits after the pair has moved a certain amount, even if the PA hasn't reached a support resistance level? Yes, I can do. Again, it depends on what the trade is. If I'm short-term trading something like this, then yeah, I might just take 20 pips on something if it's like a scalp trade, even if it doesn't reach my first main slice area. Let's say like Ali is, I'm in at 20, I'm in at 66. I might take some money off at 86, just 20 pips, boom, take 20 pips off the table, get my stop up a little bit, reduce that risk again, even if it hasn't hit an area which I want to take profit. So yeah, it depends on how you want to set up the trade, what the trade is. If I'm trading more longer term, then I wouldn't be pissing around with the little levels around here. That's something completely different. So yeah, it all depends on how you're trading. You know, we've got fairly quiet market. So if you get 10, 15 pips out of a trade and it's taken 3 hours to do it, fine, take some money, you know, take a bit of partial profit. If you're waiting for 33.96, but it's mumbling around 33.80, 85, and it's sitting there for hours, take some money, you know, take a bit of profit off the table. If it then goes up there, then take a bit more off the table. Look at what the market's doing, trade the conditions, trade the price action that's happening in front of you. Everyone wants to get in a trade and it immediately go their way. Ali 133.66. 2 minutes later, it's trading 134. It's brilliant, happy days. But you know, as we all know, that doesn't tend to happen often. Sometimes you've got to sit and have patience. And if you find you're not getting the reward out of it that you're expecting over a reasonable period of time, if you're in profit, take a bit of profit. You know, you never go broke taking profit, as they say. Exactly. Nobody went broke making profits, Bran. You just got to make sure that your profits outweigh your losses. That's the other side of the coin. Gavin says that's what you can do. You can journal your stats. Yeah, it's something I mentioned as well. You know, for you guys and girls who are less experienced, you know, you can journal your trades, or even you can trade side by side. So have a demo account if you like. Have your trading account, have a demo account. Put the same trades on. So whatever you do in your real account, you mirror in your demo account. And then maybe in your demo account, you do the slice and dice. You say, right, well, I want to make 30 pips in my real account. Fine, you get your 30 pip profit, you take it off. In your demo account, you say, right, well, I'll take half the profit there. Let's see what would have happened if I continue it. Now, whether you journal it on a bit of paper, or as I say, use a demo account, and then you can see, you can match one against the other. What happened when I tried to let that trade run? Did it make more money, or did I make money but not as much as I would have done because it hit my trailing stop? And then you can work out, okay, how many times you get stopped for a loss and how many times you make a profit. And then on the demo account, you see how many times when you ran a trade that gave you more profit, or you took partials and you brought your stop loss up behind it, how many times did you lose less money than you did trading the other way? So that's another way. Journal it, as I say, use a demo account, whatever you want to do, but put the work in to analyze your own trading. You know, I analyze my trading in my head, again, just through experience, because I've been doing it for long enough. I can analyze it in my head. I don't need to write it all down. But even I still use a demo account now and again to trade, to just test certain strategies and just to see, you know, did I do right on that or did I not do right on that? Or if I need to improve, if I had a little run of losses, let's say I'm out of kilter with the market, my trading's out of kilter, sometimes I can move to a demo account just to get back practicing, find out what's not working, find out what's changed, and then get myself back on track. And then I move back to a real account again. So, you know, some people knock it, but demo accounts can be a good tool. Yeah, as you say, Gavin, let your stats help you decide what you can do going forward. And importantly, know when things are changing. A strategy can work 9 times out of 10 for a month, and then something changes in the market and that strategy doesn't work. Identifying that change is very important for trading, but I could go on about that all day. We can save that for another show. I've just seen the clock. Right. Well, I hope that's been a good session. It seems to have been a good session for me. Anyway, lots of information from you guys and girls. I hope it's helpful. I hope you put it to good use, and as is the advice that you're getting from your fellow people here, like Gavin in the chat as well. So on to tomorrow, folks. Thank you very much for coming to the Flow Show today. We shall see you all tomorrow. Have a good one.